Absolutely. I love junior miners right now. That encompasses a lot of our portfolio right now. I think we're going to see outsized moves compared to the majors. I think your risk reward is probably better right now. And so that is how we are positioned.
So, we've seen silver move off of a low. I can't remember where it was months ago, but maybe 17 or something like that was the low, 16, 17. And now it's, almost double that. Tracy, are there any specific indicators or factors in the current silver charts that resemble those that are observable back in the 2010 time period prior to that significant price surge?
Yeah, I mean, what we saw in like 2010 was kind of a parabolic move. I caught the price action here. If just by looking at the charts from a purely technical standpoint, the price action looks a lot more constructive here. And I think, again, that's also because of the industrial use purposes. But really, we saw that move in 2010 that went from what it was 17, $17 straight up to 50. Right. I mean, yeah, and literally straight up. And then what happened? We immediately came down. We reverted back to the mean, and we were at we were at $17 again by 2012.
So that's not the type of price action we want, and that's not the type of price action you're seeing currently.
Correct. This is more of a stepping stone. I like it. We just broke out of, a nice kind of bull flag. If we went from a bull flag to a consolidation to kind of stair stepping up. I love this price action. This makes me feel a lot better about where this is going. It's more constructive, and it's not a kind of move that we're going to just see it revert because the market was chasing it.
So, Tracy, the mining companies, gold and silver mining company balance sheets, they're beginning to improve rapidly as the prices have soared, oil prices have dropped. In addition, borrowing costs, they're set to drop as well. Newmont reported their numbers, and while revenues were up big, profits were the highest in 5 years. Their stock got whacked. In your analysis, what happened with Newmont? Is that an aberration, or is that indicative of what all miners will be facing?
No, I don't think it's indicative of what all miners will be facing. And to be honest, I don't. That's not one of those in my personal portfolio. So I really haven't gotten the opportunity to look over their, what their balance sheet was and why people kind of hated it.
I think some of it had to do with the acquisition they made a few years ago. And maybe things weren't looking so rosy with the way they were integrating. But I was curious if you had any other thoughts.
Unfortunately, I have not done my homework on that one yet, just because it's not one that I'm holding in our portfolio.
So all-in sustaining costs for mining companies, they really tell us a story on the real rate of inflation. Many say you don't want to own gold miners whose costs of mining go up during inflation. However, there is a history lesson here. The only time that the cost of mining gold fell was in the 1930s depression. In the 1970s and the 2000s bull markets for the metals, the cost of mining gold went through the roof, yet the miners blew the S&P away. In your analysis, do you see a potential similar paradigm forming where the miners' all-in sustaining costs could continue to rise, yet they're still going to outperform the S&P anyway?
Oh, absolutely. And, the cost of everything is going higher. Let's put it that way. And with increased pressures for mining companies, because we all know mining's a pretty dirty job, right? So increased pressures to become more green, right? Or at least clean up. That costs money. That costs, that's R&D. That's discovering new ways to do things. That's adding, a lot of these computerized systems to find problems before they exist. And, there's just a lot of cost involved in kind of cleaning up your industry. And so, but I think that overall investors will like that. in other words. So I think that that's not going to be a hindrance to their stocks, because I think that, overall, even if you're not an ESG lover, you still, would like to see the mining industry clean up. That there's, let's be honest, it's hasn't always been the best working environment and the cleanest thing. But it's, companies are aware of this, and they're aware of what investors want. And so they're going to spend money doing that. And I think that they'll actually be rewarded for doing so.
So, Tracy, in a precious metals bull market, the junior silver miners, they're always the last to move, and they're the most explosive. Rick Rule has famously shared some examples where he had invested in some silver juniors that moved from like 10 cents to $45, and others that moved from like 50 cents to $65. Are silver juniors grossly undervalued right now? Do you see an opportunity for some juniors to move like what I just described in the previous bull market in this precious metals bull run? And do you see this cycle as one as potentially being, like a rising tide raises all boats?
Absolutely. I love junior miners right now. That encompasses a lot of our portfolio right now. I think we're going to see outsized moves compared to the majors. I think your risk reward is probably better right now. And so that is how we are positioned.
Interesting. So I'm going to shift us over to energy here. With widespread support from G7 governments, major corporations, financial institutions, and the media, is the nuclear energy sector poised for substantial growth and investment, and that would benefit uranium producers and even the junior mining companies?
Absolutely. Again, like silver, I love junior mining companies right now too, particularly once again in North America, which is Canada and the US. I think there's a lot of opportunity there. Those stocks are really inexpensive, and there are a lot of new findings in North America that are very interesting. So obviously, do your due diligence on each of these companies, but I think there's a lot of opportunity there. And I think what's, we've seen kind of since, COP28, like this major shift towards nuclear, right? Because, after 3 Mile Island, Chernobyl, Fukushima, we kind of saw the West steer away from that industry. And so when the decision was made during that meeting, where the Western countries, well, most of them, except for Germany, decided to. It wasn't just Western companies. I mean, that's a global event. So talked about wanting to increase their nuclear capacity by threefold by 2050. Now, granted, that is a beautiful goal, but an impossibility. But just the mere fact that we saw this shift in the narrative is going to be very beneficial for mining companies and uranium. And again, that's another industry that is in a huge supply deficit as we speak now, as we add SMRs, and we add new Asia has the most new nuclear reactors coming to fruition right now, and the West is kind of behind. And then again, once new technologies like SMRs, even though they're not viable right now, we've got a lot of companies exploring this, and that I think they'll be very viable and very inexpensive once these start coming online.
So let's stay on the supply deficit for a moment. Tracy, Cameco, the world's second largest uranium producer, recently has signaled a production expansion freeze until uranium prices catch up. Earlier this year, Kazatomprom, the world's largest uranium producer, extended guidance that production targets for 2025 would be lower than expected. These are the two largest uranium producers on Earth missing on their targets, or they're holding back their production. With uranium already in a supply deficit, what will the impacts of this be in your analysis?
Obviously, this is going to be a huge problem. And if you look at a supply deficit chart, and I can send you one if you want to include it with this, but it's only set to grow. And but where there is worry, there's also opportunity, which again is kind of why I like the junior miners here and with their new discoveries, because sometimes with these larger companies, um, there is a lot of red tape and bureaucratic things that they need to go through that junior miners don't always have to do. And as long as we hold over, $80, uh, junior miners will do fine.
So it may take some time still, but it really is looking more and more likely that society is going to eventually settle on nuclear power as the compromise solution for baseload power generation. I mean, everything seems to be moving in that direction. But this is going to come at a time when there's a deficit of uranium production compared with this growing demand that we're talking about. Additionally, there's currently the Sprott Physical Uranium Trust that's issuing shares in order to purchase uranium and then take the uranium off the market.
Right.
So, these uranium purchases should help accelerate price discovery, you'd think, at a time when utilities have run down their inventories and they need substantial purchases to restock. The combination of these factors ought to
And
lead
we
to.
sorry, and we also have Russia. We also just put sanctions on Russian uranium here in the United States.
Right. Yeah. So, I mean, the combination of all of these factors, it ought to lead to some dramatic increase in the price of uranium, as it's going to take multiple years for sufficient incremental supply to come online, even if the restart decision were made today. Yet we know that when it comes to uranium mining production, there's always shortfalls, missed production estimates, et cetera. So supply gaps can last for years. Do you view uranium as a long-term portfolio play, sort of even in the light of like a utility? And is the next leg up coming soon in this bull market? And how are you viewing the uranium equities really inside of a portfolio mix?
Yeah, I mean, obviously, yes, I agree that, I think this is going to be a long term play. But for anybody that's ever traded uranium before, it's a very frustrating trade.
Right.
And things don't always happen as quickly as you think, right? No matter what. And so, I think if you find some solid companies, I think that would be, a hold in a long term portfolio. Obviously, watch what they're doing. If something happens with them, but that uranium miners are in our long-term portfolio. Which would be for the next decade. Just because I don't. I don't see where supply is going to come from. And again, uranium is a very hard trade, but we haven't seen kind of this global shift in the narrative all together congruently, right? Before it was kind of, the West hated nuclear and Asia loved it. And, then Japan loved it. And then Fukushima happened, and then they didn't love it. So, I think what we're seeing right now is kind of a global consensus that this is the direction that we have to move in. And that hasn't been so in the past. And so I do think that, prices will be set to go higher. I think there's a lot of education needed about the nuclear industry, particularly for investors that still kind of have in the back of their head that nuclear meltdown disaster is going to happen.
Right. Yeah, I would agree with that wholeheartedly. So, for the next leg up in this bull market, is your analysis pointing to sometime after the election in 2025, maybe to correspond with an increase in the inflation rate? Are you seeing the next
Yeah, I
leg
mean,
higher
I
than?
think that's going to happen. I think what also will, we're already seeing at least, the current administration is making strides. And so obviously we'll have to look to, whoever the next administration is to see if they propel these same kind of policies. There's a lot of grants going on right now. There's a lot of federal money from the DOE given to companies to expand, technology and research into this area. And so I don't see that not continuing, but I also don't have a
Crystal
I
ball.
don't have a crystal ball at this point. So we'll have to see what the next administration does. But I think going forward that, I think this consensus will stay that this is kind of where we need to go, just because wind and solar are not going to cut it. It's just, they're not.
It's just not going to cut it. Totally agree. So, Tracy, oil traditionally doesn't do well in the third quarter of election years as the incumbent does whatever they can to keep oil prices low. We're seeing that now, but Occidental Petroleum, the company Warren Buffett owns hundreds of millions of shares in, is currently near its 200-week moving average. It's important because Charlie Munger used to use that as a benchmark when he liked a company, that if it were near the 200-week moving average, that made it a good buy in his analysis. So Occidental is near its 200-week moving average, and oil has been trading sideways in the high 60s, low 70s for quite some time. Are you bullish oil in 2025 on the other side of this election? What range do you see the price going per your analysis? And where's your best bets? Do you like the big producers, the exploration, the service companies?
I like, believe it or not, I like nat gas and LNG better right now, and midstream. So I like pipelines right now, to be honest with you, as far as an energy play. When we talk about oil prices, what people don't understand is that even at, $68, $70, that is, even if you adjust for inflation, that is higher than the historical norm that it's been trading. Now, here is where the problem is going to be. So shale break-evens are 65, right? And so if oil prices start dipping below that, you can be assured that those CapEx budgets are going to be slashed across the board. In fact, right now, oil companies are working on their budgets for next year. And I'm sure that they're looking at oil prices right now and thinking, well, OPEC has been withholding 3 million barrels off the market voluntarily. They could, decide to put that back on the market. Now, I don't think that they will right now at these prices either, but that's got to be in the back of your head if you're a shale company in the United States, right? And so I'm sure that they're already probably curbing expenditures for next year.
Yeah,
Which again is going to be, that's going to be a production problem within the U.S. And we probably, in my opinion, I think we've peaked as far as shale production is concerned, unless something crazy happens. So where do I see prices going forward? I think we're still going to be in a sideways market, and that's not a bad thing, right? Highly volatile oil prices are not good for the consumer. They're not good for oil companies. They're not good for anything. So, in my opinion, if we could just stay in a sideways market, these companies can make good money, and they're good investments.
Yeah, and on top of that, it really helps out the mining complex because they're going to need these lower costs in order to generate greater profits to go in and mine more.
Right.
Yeah.
So, I'm not, and I've always been one of those people, like, I don't want to see $300 oil. That would be devastating to emerging markets, to our market, to mining, that's just a horrible scenario altogether. So, I've never been one of those people that said, oh yeah, the oil's going to $300. Like, that would be just devastating. So, I would be happy if we could stay in $70 to $90 range. I would be very happy with that. I think investors would be happy with that. Oil companies would be making money, and it's not spiking energy prices across the globe.
Outstanding. Well, this has been a wonderful conversation. Before we wrap up here, and I ask Tracy our final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. If you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Tracy as much as I have. Please let her know, hit the like and subscribe button, and leave a comment below the video. It's now time for our Golden Nugget segment. Tracy, let's discuss portfolio positioning. Based on all we've discussed today, with your experience, your worldview as the backdrop, how are you positioning for the next 12 months? What assets do you like, and what assets do you absolutely want to stay away from?
So, I like junior miners right now. I like pipelines. I like natural gas, LNG pipelines right now. I like uranium, obviously. I even like offshore right now because we're seeing really that's where a lot of the exploration is coming from right now. In Suriname, Guyana, now Namibia, finally taking off a little bit.
Yeah.
So I think offshore is very interesting to look at right now. That's kind of where I'm positioned right now. I think what's also interesting, so far I've stayed away from ags because they haven't really been performing. But
What about the platinum group metals?
I love platinum. I love platinum. I've actually wrote about that on my Substack,
Oh, awesome.
Renegade Resources. So that's on my Substack. But I like platinum. That's been more of a trade for us, meaning we've been in and out of that market quite frequently, right? Because platinum tends to go below 1,000, loves to get bought back up, moves like $100, and then pukes again, right? So that's just kind of how that market works. So I do love platinum. I've actually been trading platinum for years, and so, but again, that's kind of a market that we're in and out of. It's not really a long-term hold. It's more of a trading market for us.
What about assets that you want to stay away from?
Well, right now, ags is what I'm worried about right now. We've seen, we've seen problems in sales with John Deere. We've seen problems with Cat. We've seen problems with, so I'd be very careful about that industry right now, even though I want to see it succeed badly. Like I want to get long that industry right now so badly because everybody needs to eat and there's all the reasons to be long that industry. It's just it's probably not where I would want to be right now. Let's put it that way.
Well, Tracy, thank you for coming on to Metals and Miners and being so generous with your time, analysis, and ideas. It's been awesome to spend the time with you. Would you share with everybody any important message that you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Yeah, absolutely. Well, I'm Shy Girl on X Spaces. It's because I was working at the Board of Trade when I started my account, so it was Chicago Girl. So I am there. That's where I post most often. I have my Substack, which is Renegade Resources. I also am the commodities portfolio allocator over at Damped Spring, Andy Constance service. So you can find me there. You can subscribe to that. And we have a private channel and portfolio allocation part of that. And then my company, Hill Tower Resource Advisors, which is really just a research company. And I think that's where you can find me.
Okay. Well, I am going to put all that information up on the screen. Everybody can be able to view it. They'll be able to click through. It'll be in the description. So all the links will be active. Guys, if you have not been following Tracy, you need to. I've been following you for well over a year. Your information's fantastic. You're funny. You bring life to the situation, but more importantly, we're in this beginning stage of a very important commodities cycle that everyone is paying attention to. They're trying to time, and you're one of the resources that everyone needs to tap into. So thank you for being here with us. I look forward to having you back on sometime soon, Tracy. And everybody else, thank you for watching.
Absolutely. Thank you.
I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. When you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.